Hello, everybody. This is Toni Turner, and welcome to the Market Now on Friday, August 21st at about 1 p.m. Eastern. Well, the S&P 500 is rising today as investors are trying to find their footing following a steep sell-off driven by Treasury yields. The financial sector is offering a boost to the broader market, with crypto-related stocks seeing sizable gains as Bitcoin is heading for a weekly gain of more than 20%. So far, Robinhood shares have jumped 12%, while Coinbase, of course connected to Bitcoin cryptocurrencies, added 9%. Materials are also up 2% on the day. And on that note, let's go on to three charts that could give us some insight into the week to come. First of all, as we always do, we're going to look at a daily chart of the S&P 500 SPDR, symbol SPY. Of course, this is the ETF that closely follows our benchmark S&P 500 index. Now, when I captured this chart today, is just a little tiny candle here, little tiny cross. When I captured this chart, the SPY was trading at $766 and change, just below last week's all-time high up here at 778. The SPY is trading now just barely above the red line, the 20-day moving average, above the green line, the 50-day moving average, the 20 days coming in at 762, the green line, the 50 days coming in at 751 and change, and certainly, thankfully, above the 200-day moving average down here coming in at 707. Now, if we look left on this chart, we see that earlier in the year, in January and February, the SPY was consolidating between 776 and 797 right there. Then it fell on news of the Iran war and down to 629 in March. Then rebounded dramatically all the way up, crossed over, back over its moving averages, and rebounded all the way up, walking up its 20-day moving average here to June. It made a high here of 759. Then it dropped to 725. Then it rallied back up to the 50 and 20-day moving averages and started walking along the 50 and 20-day. And consolidated, then dropped down to 728, thankfully holding prior price support, then pivoted to the new highs up here at where I put this right here at 778. And then in the last few days, the interest rates going higher have not helped, and it's dipped to where we are now at 766. So looking at this chart here for the coming week, we know that we do have resistance here at the highs up here at 778. We have potential support here at the July highs, June-July highs right here. Whoops, that's not a straight line. At 755. Then, of course, just underneath, we have the 20 and 50-day moving averages. Then down here to 728, which is an important level because, as you see, it was touched before 2 other times. So that's an important level. 700 and down here at 728. So obviously here to stay bullish, we want the SPY to stay above $751 at least. That's the 50-day moving average. Or again, 728 would be good, but we definitely want it above that. Now, please know that next week we have a lot going on. NVIDIA earnings are coming out after the bell next Wednesday, and a lot more going on beside that. So you'll want to be careful and pay attention to your stops. Our next chart is a daily chart of the Invesco QQQ, symbol QQQ. This is the ETF that follows the NASDAQ 100. Which is the top 100 non-financial stocks in the NASDAQ stock market, including the Mag 7, all the big momentum stocks. So when I captured this chart today, the Qs were trading at $713 and change, still below the all-time high touched way back here on June 3rd at 748, right back here. Now, if we go back to where we are in present day, we see that the Qs are trading. If you can see, it's trading just above the red line at the 20-day, which is coming in at 709. It's just barely a few cents above the 50-day moving average, which is inverted from the 20-day, which simply means price has fallen, and that anyway it's coming back here. 50-day is at 713. And it's still thankfully above the 200-day moving average, which is coming in at 652 and change. So we know that back here from the highs at this point in time, back in January and February, back here on the left side of the chart, we know that these highs here were at 637. This was actually, we thought, a top to a really exciting uptrend, but then it started consolidating, which makes sense. So we had this high here at 637, and then it fell below the 50 and the 20-day moving average, and then fell hard on the news of the Iran war, of course, down to a low of 555. Then the Qs rebounded, and of course, when techs want to climb, there's nobody better than techs to climb up very, very high. Of course, this was a lot on AI. So it rebounded and flew up in April and May to an all-time high in June, up here at 748, and that has remained the all-time high. Then it fell down here to, sold off, fell down to 693, rallied up to 744, then formed a triangle that we followed in the market now. We watched this, and we know that if a triangle is forming, the breakout is either going to break up or break down. It's going to be dramatic, and in this case, it broke down, fell down here to and down to 660 at the end of July, down here, rallied from there up to 734. Right where we are, this recent high that was last week, nearby high, but it can't get back here. The interesting part of this chart is, at least at the moment, the Qs, the techs can't get back to that all-time high at 748. They haven't been able to do it since June, so kind of interesting there. However, I think that some money is going into, certainly into utilities, although that was down today, but certainly going into healthcare and different areas besides strictly AI, at least at the moment. So it's got this high at 734. It can't get back to the all-time high as of yet at 748. We'll have to see when it can do that. So now, down where we are now at 713, if we look at this chart, we can see that it does have resistance here at 734, and it's certainly on up to the highs at 748 that we just talked about. Potential support here is the 50-day moving average, which is just sitting atop at 713. We got the 20-day inverse underneath at 709. We'll see if they can hold. Then, of course, the next support down here is 660, and the 200-day moving average coming in at 652. Now look here, there is a gap here. So it would be great if that gap would hold, and that level is 708, just under where it is now. So I'd like that gap to hold. Otherwise, if it starts down, it'll probably have to fill that gap. So it'd be good if it could hold above the gap at 708. Definitely we want it to hold above 660 in the 200-day moving average. So I'm thinking here, could be wrong, I'm thinking we may see a little pullback here in tech stocks, just the way it looks. And maybe even a little bit in the S&P. It looks like some risk money is coming off the table in the last few days, so we'll have to see, but I'm definitely raising my stops and maybe taking some profits on current short-term trades. Our final chart today is a daily chart of the Global X FinTech ETF, symbol FINX. Haven't looked at this in a while. Financials have had a rough time lately, so I looked at this chart and I went, whoa, that looks good now. I understand that this breakout today had something to do with the cryptocurrencies getting some attention and getting, some short squeezes, buying coming in. So I'm aware of that because this ETF does have stocks in it like Coinbase. At any rate, this does look like, after this consolidation, a pretty decent breakout if it can hold. So the fintech, I'm going to call it that, has 74 holdings. Top holdings include Block, PayPal, Robinhood Markets, which moved up today, of course, Fiserv, Global Payments, and Coinbase, which of course moved up today on the crypto news. When I captured this chart today, the fintech was trading at $27.51. It's a top. It's 20-day, the red line moving average, which is coming in at 26. It's a top the 50-day moving average, which is coming in at 25 and change. And but the 200-day moving average, because it has been going down for a while, so the 200 days going down, that's coming in at 26. That's inverted to these other two. So I looked, as I always do, at a long-term chart of the fintech. I always do that before I get into anything. I want to see what the behavior was in the last few years. So the long-term chart shows us that for the fintech, the all-time high was 52, wow, huh? In October of 2021. Excuse me. Then it fell, the fintech fell to 19 in 2023. That's quite a drop. So it's had a really rough time. But now it looks like it may be coming out of it. So if we look left here, we can see in January, right back here, the first of the year, January, it was trading at a January high back then at 29. Then it fell down pretty dramatically to here and then to a March low here, a little bit lower at 22. Then it rallied back up to 26 in April. Then it fell back down to the 50-day moving average right here. Then it went back up and retested 26 again. Stocks like to go where they were before sometimes. And then dropped in June to 23. And then rallied back up above the 20 and 50-day moving averages here to back up to where we are now. Moved above it, consolidated, then started breaking out. And you can see how in the last 2 or 3 weeks, and unfortunately I was out of town and didn't see this move, but you can see how the fintech was starting to gain. There is something going on here. There's momentum going on here. Somebody's starting to buy. I could see that. So again, some of this breakout today was definitely from the crypto breakouts. So what I'm saying here, the breakout is nice though. I don't know. I'm thinking it may continue here, at least for a while. So in the coming week, if the fintech can stay above the green line, the 50-day moving average, which is coming in here at 25.59. So if it can stay above this in the next week, I will buy a position in my trading portfolio. My initial stop is going to be down here under the 50-day at $25.25. Now, of course, if you want to make yours closer, or your stop closer to price, I can understand. I'm going to give it a little bit of room here. If and when the fintech climbs above 29, which was back here in that we talked about before in January, if it can climb above 29, I will add to my position, and of course by then my stop will be a trailing stop. So you may want to watch the fintech in the coming week. Also, if just going to add this in here, if you got into the MJ, the marijuana ETF that we talked about 3 weeks ago here, please know that it has broken out nicely. So that worked. Okay. So now please know that at ToniTurner.com, we've lowered the price of all of our online training programs to make them more accessible to everyone. So if you'd like to become a more profitable trader, Now is a great time to check out my timeless training programs. How to bottom fish like a pro, right down here. How to bottom fish like a pro. And that's kind of what we're doing here with this FinTech ETF. This is the perfect training to check out right now. In it, I show you exactly how to detect with high probability how a stock or ETF is about to wake up from an extended downtrend and finally take off again. Our new low price for this program is only $199, and you'll receive special bonuses when you order, including 1 month of Metastock daily charts or Metastock real-time charts for free. So from our ever-popular 7 Steps to Successful Trading to how to swing trade successfully, a big popular program here, how to trade the trend to profits. I love that. It's a little easier. You don't have to keep an eye on your stock every minute. How to read charts, great for novices, anybody who wants to catch up a little bit. 3 winning setups, a really good short-term trade training. And both of these, by the way, are only $59 each. And again, how to bottom fish like a pro. Find out how my online programs can help you earn more money quickly and easily. And once you purchase, you have unlimited access to learn at your own pace. So be sure to check them out by going to the link on this screen up here, or easier still, just click on the orange button below. Until next week, be careful out there. Keep green on your screen. I'm Toni Turner, and this is The Market Now.